Busy season, be gone. EBP's nonprofit season, come on in. This is the IssuesWatch podcast. Hello, and welcome to the IssuesWatch podcast. I'm Brad Muniz, your host for the bi-weekly accounting and auditing episodes. I'm the partner in charge of accounting and auditing at Sobel & Company. These A&A episodes qualify for Nano CPE credits. If you're interested in earning CPE credit for this episode or others, hit the pause button now. Head over to njcpa.org/nano to find out how. As usual, quick disclaimer, the views and statements expressed herein are my own and not necessarily those of the NJCPA or Sobel & Company. Okay, so as I said, I know based on the timing when you're seeing this, busy season is going to definitely be behind you. So let's take our stretch and figure out what's come out lately. What's odd was during the whole busy season, there was a lot of news coming out, especially about ESG, which we'll cover on one of these episodes. And now all of a sudden, it kind of calmed down a little bit. So maybe everybody's taking a little bit of a break by the time, things start wrapping up. But FASB did come out with some information. First one is a proposed ASU. Now, if you haven't seen on the previous episodes, there were two ASUs that did come out this year, 2022-01 and 2022-02. So if you haven't looked into those, look into them. They're obviously not effective right now, but there's stuff you should look into. But something that is effective actually right now, but there is about a reference rate reform. Now, there's a proposed ASU out, even though there's one that's effective. Well, 2020-04 came out for guidance on secured overnight financing rates, okay, SOFR. We'll talk about that in a minute. Now, what am I referring to? A lot of people, a lot of companies, a lot of our clients have loan arrangements with LIBOR, London Interbank Overnight Rate, or whatever the heck it is, but LIBOR. And they decided that LIBOR is going to go away. If LIBOR is going to go away, you needed another rate that you were going to be able to use that was going to be effective. And what they came out with was SOFR, S-O-F-R, Secured Overnight Financing Rate. Now, what's important is a lot of us have loan agreements where LIBOR is the effective rate or it's a swap rate included in there. You need to look into this if you or your company has loan agreements with LIBOR. Or your clients do also, and you need to know if this is going to affect you. So look up the 2020-04. Just check out this proposed guidance that's coming out. It seems that I think they're going to kind of, I don't want to say rush this one through, but they're going to try and get it through because it is effective now because LIBOR is going away. They did change the sunset date, so it's going to make you say, oh, I don't have to worry about it. But you should always look into it. The sunset date was going to be 12/31/22. They want to change that to 12/31/24. Helps us out a little bit, especially when we have CECL that's supposed to be coming out next year too. One day we'll talk about that one. Also included in this proposed ASU is amend the definition of SOFR swap rate to include U.S. benchmark interest rate under 815. That's ASC 815, not IRC 815. I stay away from that IRC stuff, Nicole, so don't worry. Okay, another area of accounting related is ERC, Employer Retention Credits. So I've been looking at a lot of financial statements in my office just this past week. I looked at 6 over the weekend and 5 of them yesterday. They were small, don't worry, I'm not rushing through stuff. And I saw a few with ERC, and it kind of pops up on you when you last expect it. If your clients have it and all of a sudden, sometimes they've received a check, you forgot about it, or they received a credit, well, you're going to have some sort of disclosure, and especially if it's an audit, you have to have some sort of consideration. The Center for Plain English, if you're a member of that, that added-on feature of the AICPA, put out some very good information on it. Remember, there are 3 areas to follow: either ASC 958-605, which is non-for-profit revenue recognition; IAS, which is the international standards; IAS 20. Which we were able to follow under PPP, kind of left that in there, and ASC 450-30 for contingencies/gain contingencies. And the CPEA felt that one didn't apply as much, although I have seen, not only in my office or in other places, people are applying that. It talks about retroactive application for only for 2020. Remember, this thing came out and people were getting the credits in 21 for 2020, so you have to consider that. It talks a lot about what you have to consider, especially as an auditor or accountant preparing the financial statements, is eligibility and derecognition. Are these credits, are they truly eligible for the credits? That's something you always have to consider. And lastly, offset of expense or other income. You have the option of doing either, but you're going to have to disclose it. So you can offset the expenses, which most people we recommend not to do with PPP, but you can do under ERC, or you can put it into other income. Okay, the AICPA, one that is important right now if you're an auditor of EBPs, or if you have a company where you administer the EBP and you deal with the auditors, you need to know that SAS 136 for employee benefit plan audits is out and is effective now. This one is significant. The other ones I kind of talked about, gloss over just a little bit, spent some time on it, but this one has come out is very significant. It changes the report significantly, okay? The big one that's out there that you need to know, and you have to make sure you address this, because especially if you have a peer review coming up and you miss this one, this pronouncement in general, it's going to be bad, but if you miss this one, it's no longer a limited scope audit. Now, you could do a full audit. You've always had the ability to do that. But remember, we were able to do what was called a limited scope audit, where we get the certification and we'd say we're not attesting to certain things and blah, 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 blah. We had the disclaimer paragraph, etc. No longer a limited scope audit. You're going to like this one. And you talk with the AICPA, you talk to the NJCPA, A&A people, resource people, they know this down pat. It's a ERISA section 103A3C. So we went from limited scope, nice and easy to say and think and explain to the younger staff, to ERISA section 103A3C. That's what it's referred to now. It's actually in the audit report that way. You need to remember to do this. Please don't miss this and go through a peer review. Other parts of the changes in SAS 136 is enhanced management acceptance, risk assessment. Of course, they keep focusing on that. Direct you to make sure you understand the tax status and review the tax status of the plan, prohibited transactions, reportable findings, and one of the big things that's in there, which you just think, really they had to put this in there, is making sure that you're reading the draft of the 5500. And the reason why I say that they say, really, you have to think about something like that and put that in there, because people don't do it, or they do it. I believe a lot of people do it, but they don't document it in their work paper. So make sure you get a copy of the draft of the 5500. Don't just put in the work papers. I peer reviewed a firm recently where they put the 5500 in and had nothing on it. So make sure you tie the 5500 out. There's certain things also you should be looking for, but at a minimum, make sure you're tying out the numbers and reconciling it to the financials. Okay, a couple other areas I'll go over real quick. Similar to the audits of the employee benefit plans, the DOL came out with some commentary. We found this very interesting. If you need a copy of it, the society may be able to send it out, or I have a copy of it. The DOL came out with some commentary on cryptocurrencies in 401ks. I would have never thought about somebody investing in their 401k or their retirement savings into cryptocurrency. I'm not judging it. I just wouldn't have even thought about it. And what they address in there, what's important is it just gives some guidance or things to think about. They're not telling you to do it, not to do it. Just gives you some things to think about. It's not as an auditor's approach. We're just talking general. It talks about the speculative and volatile natures of the investments. Talks about investments decisions, the participants' inability to make proper investment decisions sometimes. There's valuation concerns about cryptocurrency. And of course, there's always the evolving regulations around the cryptocurrency. So it's very interesting, something I hadn't think about. If you want the information, you know how to get in touch with me on NJCPA Connect. Send me an email, and I'll be happy to send you the link and the information. It's not a link, just the information. It's a really great read. So last thing I'll say is Frank Boutelet, we haven't seen him around in a long time, and I just want to say there is some changes, some potential new disclosures that relates to SPACs. That's for you, Frank. They want disclosure as it relates to SPAC sponsors, conflicts of interest, dilution, business combination with private entities, and disclosures relating to projections. So I just wanted to throw that out there that if you do audit SPACs, and I know there's 2 or 3 big firms that do them in our area, including Frank's firm, and I know that they're on top of this stuff, but there's a lot of disclosure relating to it because the SEC is watching over that a lot. So I crammed a lot of information into the 10 minutes. Let's just try and close this out. And in closing, I'd like to remind you that there are some NJCPA events coming up. As we talked about employee benefit plans, the Audits of Employee Benefit Plan Conference is on May 19th. So as I said, there's a lot of changes coming up. Please make sure you attend that if you audit, and even if you have a company that has employee benefit plan. It's a great conference. There's great presenters there, a great group of people that pull it together. And come on down. Join me and a lot of your fellow members in Atlantic City for the return of the NJCPA Convention and Expo on June 14th to the 17th. All right, let's get down there and let's have some fun together finally. Register for these events and more at the njcpa.org/events. Lastly, as I always say, if you're not already a member of the NJCPA Accounting and Auditing Standards Interest Group, be sure to join at njcpa.org/groups. They're an amazing group. Laura Crowley is the chair now. I think that she's transitioning, but they're a great group of people. You'll learn a lot from them. Look into that group. Thanks for watching or listening. See you in a couple weeks.